Hi everyone, and welcome back to the channel. So it started. We're seeing big scares of bankruptcy all over the news. Most recently, we're seeing Carvana. They haven't filed for bankruptcy yet, but we're hearing news they might. Today we're going to talk about why they went down 97% year to date in terms of their stock, if they'll really go bankrupt, and why this isn't the last time we're going to hear about companies going bankrupt. But before we get started, if you wouldn't mind hitting that like button and subscribing, it really helps the channel and make sure others see this content. Anyways, let's get into it. So what has caused Carvana to suddenly be considered a huge financial risk? Well, one thing for sure is their aggressive buying strategy. They started buying cars at all-time highs and then tried to sell them for even more. They worked really hard to try and buy up a really large share of the used car market, but it hasn't worked out exactly as envisioned. In quarter three alone, they lost over $500 million. But that's not all. They do have some positives. One thing that Carvana does have going for them is their no-hassle, easy purchasing website. Recently though, that hasn't been enough to get potential buyers to buy their cars. Their aggressive strategy really hasn't paid off as, again, they've lost over $500 million in quarter three. Even worse news is they've had analysts saying that their stock should be worth just $1. That's their price target. All of this news has caused Carvana to drop to its lowest price of just $3.83 a share on December 7th. And it's down over 97% year to date. So after all of this terrible news, will Carvana go bankrupt? Well, naturally it's hard to say, but I don't think so. I think it's more likely they'll get in some type of restructuring deal, and that's due to the news I heard last week. Last week I saw that Apollo and Pacific Management Group is actually getting together and trying to work out a deal about their unsecured debt. Those two groups own about $4 billion of their unsecured debt, which is most of it. They're working together to see exactly if they would go bankrupt, how they'd split the debt, and finally, how they'd split the assets. More importantly than that though, I think they could be working together to try and get a management group in there to take over and try to make Carvana profitable. I think a lot of people think this is a company that could have merit at some point, and I think it's a good idea. But it's too early to tell if it actually is going to work out and what exactly those two debt holders are going to do. So stay tuned here and I'll keep you updated on what's going to happen. I can see why their creditors have some worry, as their cash has decreased and their debt has increased in recent quarters. Personally, I think Carvana is in some trouble, and unless they make a drastic change, they really aren't going to get any better. On the other hand, I do think that change is coming, as their CEO did put out a statement and is planning to make changes, but it might be too little too late. Make sure you leave a comment below what you think is going to happen. Is Carvana okay? Is it a good business model? And do you think they're going to file for bankruptcy? So after seeing these bankruptcies in crypto and now this huge scare with Carvana, what's next? Are bankruptcy scares just going to start being the norm? Well, in the short term, yes, and long term, no. And let me tell you why I think that. Number one, and the most important thing, is because of the interest rate. It hurts two different things. Number one, the consumer. The consumer is not going to spend money on non-essential goods right now. It just doesn't make sense. Non-essential goods are way, way, way too expensive, and essential goods are way too expensive. They just don't have the discretionary earnings in order to do that right now. That's why you're seeing car sales go down, and it just doesn't make sense why people would spend 7-8% interest on a car loan. It just really doesn't make sense, and people aren't going to do it. Number two, we're seeing that businesses are finding out a little bit of a cash scare, and that's because they're burning through their cash flow. And even more than that, their loans that were at really good terms and really good interest rates aren't there anymore. So they're not going to have that cash as long as they had before because the interest rate is so high and it makes their payments higher. So those two things combined, what's causing a lot of problems here, and why companies that are on the edge and not doing well are going to go bankrupt in this short-term period. Companies that are doing well though and have a lot of liquid assets and have cash flow generated, we're not going to see that as much that they're going bankrupt. We might see layoffs and stuff like that, but we're not going to see bankruptcies of them because they're solvent. They're going to be okay through this rough patch. Another reason I say no long term is because of the jobs market, and simply we're just not in a recession yet. Yes, some people are saying we're getting ready to get in one, and that may be true, but based on jobs reports, we're still not really seeing that. Jobs are looking great right now. There's still plenty of jobs and plenty of opportunity for people to get jobs. Wages also haven't decreased. People are still increasing their wages when they're switching jobs. There's just no real reason to see why really good companies that have a strong foundation aren't going to be able to weather this small storm. Obviously, if we see a bad jobs report, all bets are off, and you should be ready and start to get worried about what the future holds. But I've been saying that for a while now, so watch my other videos if you have any questions on that, or Just don't know what I mean by that, but basically, jobs are what's holding everything up. So if we see something change there, be ready for a disaster. Well, guys, this wasn't a long one, but I felt it was important to talk about Carvana. As we're seeing bankruptcies and cryptocurrencies, now we're seeing a big scare with Carvana. Make sure you stay tuned here. I'll be keeping you up to date on all this kind of stuff. Also, next week, we'll be talking about the FOMC meeting, CPI, and what retail sales were. So make sure you stay tuned. Otherwise, I'll catch you in the next one.